Stocks up as commodity slide offers a salve for inflation fears. Singapore stocks and bonds have been both headed for his or her first weekly advantage in a month on Friday as buyers wagered on significant banks bringing inflation to heel, although boom fears dragged on commodities. Copper, a bellwether for economic output with its wide variety of business and production uses, slid 3% in Shanghai and is down extra than 7% for the week, its sharpest weekly fall for the reason that pandemic-driven monetary markets meltdown in March 2020. Oil also fell overnight, and Brent crude futures are down 2% at the week to $110.62 a barrel, at the same time as benchmark grain prices sank with Chicago wheat off almost 9% for the week and at its lowest considering March at $9.42 a bushel. ORGRA. The price falls have made for a few remedy in equities since electricity and meals had been the drivers of inflation. After some heavy current losses, MSCI's World Equities Index is up 2% at the week. MSCI's broadest index of Asia-Pacific stocks outdoor Japan rose 1% on Friday, flattered by quick dealers bailing out of Alibaba NYSE, BABA, which rose 5% amid recommendations that China's generation crackdown is abating. Japan's Nikkei rose 0.8% for a 1.6% weekly gain, and S&P 500 futures had been flat after the index rose approximately 1% in a single day. The US dollar is hovering just underneath the two-decade high towards a basket of fundamental currencies. While marketplace worries about an abrupt slowdown or the wrongdoer behind current actions lower in uncooked materials expenses, decrease commodity costs do experience like they can be just what the medical doctor ordered for the worldwide economic system, stated NatWest markets strategist Brian Dangerfield. So a whole lot of our difficult touchdown fears relate to issues that link lower back to commodity fees. Soft information via this week has been responsible. Gauges of manufacturing unit pastime in Japan, Britain, the Euro area and United States all softened in June, with U.S. manufacturers reporting the primary outright drop in new orders in years within the face of slumping confidence. Bonds rallied difficult on hopes the bets on competitive fee hikes might need to be curtailed, with German two-year yields down 22 basis factors in their biggest drop on account that 2008. GVD, EUR. The benchmark 10-year Treasury yield fell 7 bits per second in a single day and became constant at 3.0944%. The U.S. dollar has slipped from recent highs, however now not too far as traders stay cautious. It was remaining fairly steady at $1.0529 in keeping with euro and purchased 134.79 yen. FRX. The battered yen has steadied this week and drew a touch support on Friday from Japanese inflation topping the Bank of Japan's 2% goal for a 2D straight month, placing some greater pressure on its ultra-easy coverage stance. European Central Bank and Federal Reserve speakers might be watched intently later inside the day, as will British retail sales statistics and German agency self-belief. Beyond that, the primary fear is what it all weigh for agency overall performance. Second zone income reports will send shockwaves to the market as the profits outlook hasn't deteriorated materially thus far, and so one can further construct issues of a recession, mentioned Charu Chanana, market strategist at brokerage Saxo in Singapore.